morning. Ira Epstein with your morning flash update. And this update is for a very active Friday morning, March 10th, 2023 at 8:25 a.m. Central Time. Before we go anywhere, let's go to the news of the day, and then we can come back to the markets, and we'll talk about that. And I'll give you my take. So we have the non-farm monthly payrolls. A 311,000 number. So that's the high end of the number, well beyond the 200, and I think it was 224,000 the market was looking for, but some services had 200. The unemployment rate jumps to 3.6%. So why? That's because the participation rate went up a tenth. And when you do the math, more people looking for jobs, they didn't get it quite yet. That kicks up the unemployment rate. The wobble in all this comes in with the average hourly earnings month to month, which fell. So that is the number that one of them that the Fed will look at. So you have to ask yourself, so where does this put the Fed? Well, I went and looked at the Fed watch page, and we had been as high as 62% that the market was looking for just recently. To go to 50 basis points, it's now under 50. Obviously, this puts next week's CPI number fully in the camp as to what the Fed does. And the camps are lined up. You got Mohamed El-Arian this morning saying, now we got to go to 50 basis points to get ahead of this all. And you've got others that are saying, you know something, why not stay with the 25? You can control it better, and away you go with that because you're starting to see the wobbles in certain areas. Now, where the strength is still in the numbers is the leisure, the service industry, items like that. We've seen the tech, we've seen the manufacturing and the pullback. So that's where we're at there. Then you go and you look at what the yields are doing, and they're down hard, and the gold was up big. Why? Well, SVB, Silicon Valley Bank, let's talk about it. This is the bank that the startups in Silicon Valley would go to, stock that was basically not listed. They would take it as an asset, loans were made, and so on. Well, in this field of high interest rates, what's happened is some money started getting pulled back. And it's one thing when you own these bonds and they're at a loss on your sheet and you never have to cash them in, you collect the coupons until they mature. It's a very different world. When you bought them at one number, you got to go sell them because your depositors want money back. Then you've got to say, where's my cash infusion? Because under Fed rules, you have to maintain a certain ratio. They went out yesterday and they said, we're going to try to raise $2.5 billion of cash. They had to cash in a bunch of the bonds and pay back. We're dealing in billions at a time. Well, what happened is they can't find people to give them the money. That came out this morning. So the stock, I don't know where it's going to be now. When I just got here, it was down over 62%. That's just right now overnight. It's already lost tremendous value. The fact that they said they're for sale, that doesn't mean they're going to zero, but it certainly means with a stock that's still priced over $100, at least it was when I was looking at it, there's plenty of room for this market to get smashed. But here's the problem. Is there a contagion? How many banks do we have out there that have commercial property that aren't filled? I mean, I live in Chicago. It's like Death Valley in some areas of LaSalle Street where you don't have the people. You still have plenty of retail that's for rent because you don't have the bodies down there. What's going to happen with that? It's nice to say, well, they'll convert to living spaces and all. It's not as easy as you think. It all takes time. What does that do, especially as we keep seeing interest rates rise? So maybe the Fed's looking at some of this and saying, 50 basis point, we're pushing areas we don't want to push that hard. Maybe we're better off with 25. That's how I'm viewing what is going on, and that's my analysis of it. So I promise you, I started talking, this market was in the green. Now you're in the red. This is how the day's going to be. The gold is looking, I guarantee, at the banking issue right now and saying, we're getting bids in that. The dollar coming under pressure. Foreign currencies moving up on the news. Nothing happened in China so far. President Xi is going to be, president he was just confirmed again. And they're not doing anything about the property market. You're fairly stable in the energies because now the question, I don't know that the 50 basis point is a given. It was 72 hours ago. The big bets were, oh no, the Fed's going to go 50. I think now the wobble's here. Is it going to be 25 for the reasons that I just gave you? When you take a look at what's going on in the grain markets, you have to understand how bad the situation is in Argentina and how you slipped back down there. The bonds and notes I've given you, this is people scared that there's something more systematic wrong. Systemic problems taking place in banking. Is it a one-off or are there more things happening? And that's why you keep getting the bid in the gold market. So this is where you're at for the moment. We're going to cover this in a heck of a lot more detail this morning as we get going into the writing of reports, and we'll be doing them all morning here. This is a big, big event day. So how do you deal with it? You want to get our market information. All you need to do is go up here, take your cursor, move it, give a click, sign up for the free offers on the trade from me, get it from Linn, and you're going to get an awful lot of data on how this is all playing out. I'm Ira Epstein. You have yourself a great day. Remember, you can always go to our website and do that if your cursor won't work at the very top. And I'll see you all at the end of the day, either today or tomorrow morning, with our market wrap-ups for the weekend. Take care now.